Hi guys, welcome to another new video. I'm Maverick and today we'll be going through what I think will happen in the property market in the next few quarters in 2023. Just a big disclaimer, this is purely my opinion based on my research and what I've been feeling on the ground as an agent. And I know that there will be a lot of conflicting ideas coming not only from consumers but also other agents as well. But if you're interested to listen to what I have to say, then do carry on watching. So the first 3 months of 2023 has ended and what a roller coaster ride it has been for the real estate market. We've already seen 3 new condo launches and we're expecting to see many more in the next few quarters. We've seen a unit in Mark on Patterson Hill rented out for a whopping $100,000 a month. We've seen HDB resale prices stagnate for the first time in 32 months. We are seeing more property auctions and mortgagee sales, but at the same time we are also seeing record-breaking prices like a unit at Boulevard 88 selling for $4,924 per square feet with a staggering $3.5 million profit in just 3 years. So, what exactly is going on? First off, let's touch on the bread and butter of Singapore's real estate market, HDB flats. If you were in the market in 2021 and 2022, you'd see record prices for different areas being broken every few weeks. And yes, in 2023, we have seen some record prices as well, but on the ground, we are seeing that buyers are less and less willing to pay above valuation for the purchase of a HDB flat. In fact, a lot of my colleagues who are currently marketing HDB flats realize that there are a lot less inquiries now and even fewer offers. It is really unlike what we've seen in the past 2 years, where a unit will just fly off the shelf at record price in a week or two. And I think the big reason is because of the cooling measures that came in October 2022. Well, I did a video about that already, so I won't be going through the details. But I do think that the HDB resale market is in a relatively healthy position now. And agents marketing these HDB units simply can't be complacent anymore. Sellers also have to understand that if they are serious in selling, they can no longer expect buyers to be paying COV and ask for sky-high prices. The key to moving their units will be to price it reasonably, sell it, and move on to your next property. The sellers who understand this will be the ones who benefit the most, while the sellers who are stubborn and unwilling to accept this will probably never see their units sold, no matter how good their agent is. Next up, let's talk about new launches since we'll be seeing a lot of them in 2023. In fact, we're expecting to see almost 12,000 units coming into the new launch market this year, which is about twice of what we saw last year. Last year, we saw launches hitting 70 to 98% sold on their launch day, and for the first 3 new launches in 2023, we saw that they were about 30 to 60% sold on launch day. In my humble opinion, this is a sign of a healthy market. The consumers know that there are many projects for them to choose from this year. Heck, even some of the older leftover units seem like value buys these days, given the pricing trends that we are seeing today. But don't be fooled, we are not experiencing an oversupply yet. The last time the property market went on a significant downtrend was back in 2013, where we had over 100,000 private homes in the pipeline. As of 2023, we are only expecting around 50,000 homes to be completed in the next few years. Of course, the government has already ramped up efforts in increasing the supply. There will be an increase in land sales from August 2022 onwards, but we'll only see these projects launch in maybe 2024 and they will only be ready in 2028 or 2029. So unfortunately for buyers, we likely won't see any significant price drops in the next few years, but we can expect the market prices to be a bit more stable than what we saw in 2021 and 2022. So if you're in the market for a new launch property in 2023, well, lucky for you, you have many to choose from. But of course, you will have to first accept the new benchmark prices, which is an average of around $2,000 per square feet for an OCR property, around $2,500 per square feet for an RCR property, and around $3,000 per square feet for a CCR property. Which brings me to my next topic, ECs. There isn't a better time to buy an EC than in 2023. Historically speaking, ECs have always been priced around 20% lower than their private counterparts. But because prices of new launches have skyrocketed to infinity, prices of new EC launches just can't catch up due to the stringent HDB criteria, particularly the income ceiling. In fact, even if you are at the maximum income of $16,000 based on MSR, and assuming that you're taking a 75% loan, you can realistically only afford a $1.34 million property, which will only grant you a 3-bedroom if you're looking for an EC. You definitely won't be able to afford a 4 or 5-bedroom unit. There are of course other means to increase your affordability, but the point I'm trying to get through here is that developers really can't increase their prices much. And if you're one of the lucky ones who are eligible for an EC, meaning that you can meet all of HDB's eligibility conditions, and if you are financially capable of buying one, see it as you're buying a private condo, but the government is giving you a 30% discount. Historically speaking, in the last 15 or so years, ECs have always seen good profits in the resale market. And given that this is the biggest disparity of ECs and private we've ever seen, I believe that we could potentially see bigger gains once these ECs have MOP'd. Unfortunately, locations for ECs are relatively mediocre, but if you can live with that, I can safely say that buying an EC is going to be one of the best and safest property investments you will ever make. So if you're interested in the 2 Bukit Batok ECs that are coming out this year, do reach out to me. The last topic I want to touch on is about rents. We've seen rental prices shoot up by more than 50% in the last 2 years. That is attributed both to the rising interest rates and also the increase in demand from both locals and foreigners. There is a possibility that rental prices might drop slightly, but do bear in mind that as the world is slowly opening up, more foreigners will likely move into Singapore again for work or education. So in reality, there is a high chance that these high prices will stay, and we may even see an increase in rents for luxury properties in the core central region. To end off, I know that there are many concerns that buyers and sellers have in today's market. There are high interest rates, high construction costs, and also a possible recession. But do note that Singapore's real estate market is extremely government-induced, and this is unlike 1998 or 2008, where Singapore was quite literally a free market. We are extremely sheltered given a slew of cooling measures and other government policies, and it is very unlikely that our market will be affected too much by external factors. In fact, what matters the most in Singapore's real estate market is the balance of demand and supply. If we can get that balance right, I truly think that Singapore's real estate market will thrive in the years to come. There are quite a few topics that I haven't covered in today's video, so if you're interested to know more, do reach out to me. My number is flashing on the screen right now. If you found this video useful, do share it with your family and friends. And with that, thank you guys so much for watching, and I'll see you guys in the next one. Bye!